With all this Fed talk today, we're going to be breaking down how the market could respond to this. There's a couple of different angles here. Stay tuned. My name is Paul Barron. Welcome back into Tech Path. Let's get started today. I do want to thank our sponsor, and that is Tangem. Make sure and check out Tangem.com for your path to self-custody. One of the things you can do with Tangem is it makes it very easy to set up. It's like a little credit card. Works with your phone, whether it's an Apple or an Android. You can get in off of centralized exchanges. You can move some of the stuff off of your hardware or your software wallets and move over to Tangem. Very simple to set up. Remember, you want to have a few things out there in the, in the diversification side of things when you're trying to store your crypto. This is one of the places that I think you guys could, of course, check out. And it's very easy to set up. So use our link down below. It'll help you get started. Let's go over to a couple of points I want to hit on first. And obviously, in the news right now, everybody's talking about Trump and Powell. But this could have a real trickle-down effect into the markets, both from the bond side of things, but also crypto. The White House now is trying to figure out if they can actually fire Jerome Powell, and that would be a market shift for sure. Further into this was Kobe. Trump is accusing the Fed, Chair Powell, of playing politics and says that interest rates should be coming down now. Europe is cutting rates, but our guy wants to play cute. He says he's just not doing it. So as you can see, the typical Trump rhetoric that you get out there when he doesn't like something, he starts the name calling, which is not a good thing. It's not presidential, but hey, that's just his game. I want to go to a clip real quick because this will get into the whole point of how these tariffs have actually kind of flipped against his strategy anyway of trying to get interest rates lower. Take a look.
And what you're seeing is the ECB get ahead of the tariff shock. And then at the same time, going into this shock, the European economy was softer, inflation was on a downward trajectory, and the ECB is responding. So I don't want to say one is ahead of the other. It's more that the economic situation and the set of challenges facing the economy is much different in Europe than it is in the United States. Well, that's very much my view that, the Fed has two objectives. One is low inflation, and the other one is job creation and solid growth. And the tariffs are working against both those objectives. So what do you do?
All right, so Powell is in a bit of a tough place right now. And this, of course, with the tariffs themselves, have started to structure into the bond market. I'll get into that in a second. But if this is possible, if the Fed were to be in a position where maybe Powell would step down, what would that do to the market? Take a look at this clip.
There's one thing you have to remember. I know that the conventional wisdom is that this is an attack on the independence of the Fed. There is another way of looking at this, which is this Fed has sacrificed people in the past. If you remember, the president of the Dallas Fed, the president of the Boston Fed, the vice chair were sacrificed ahead of Congress looking into allegations of insider trading. If you remember, the potential side was sacrificed to protect the monetary policy side. And it wouldn't surprise me if President Trump is pushing on this, because there's a real question for Chair Powell. Should he step down to preserve the independence of the Fed? Because otherwise, the Fed will be the subject of a lot of attacks going forward. I could see a scenario in which what Secretary Bassett said before the election plays out, where they pre-announce Kevin as the next chair, and then that puts tremendous pressure, and then Chair Powell has to make a very difficult decision.
All right, so you can kind of see a lot of moving parts here, and part of this will be that there is some history of a Fed chair stepping down, and or at least a handful of the leadership within the Federal Reserve. And I think this is where it gets interesting, because if this were to happen, then you are potentially going to see a market shift. Now, the question is, which way does the market shift? With the current pressure from both macro tariffs and the global stance right now on monetary policy, the market could shift down. Here's Mohamed talking about that. Take a look.
So I think the market would look at Kevin Walsh and think he's a very credible Fed chair. And I think the market would rather have a credible Fed chair that's not in continuous conflict with the White House than being in continuous conflict with the White House. The Harvard example is an illustration of what can happen. You can suddenly have all sorts of other things questioned about the Fed if it's in direct conflict with the White House.
Isn't this conversation alone putting into question the independence of the Fed? You're talking about scenarios where we could basically get around the White House to placate the president.
But we've seen that. Scenarios where they've gone around the Congress to placate the Congress. We've seen a situation where, in the beginning, they sacrificed the potential side. Michael Barr was the vice chair, and he stepped down. So I don't think this is much a structural break, but I do think there's a very delicate judgment, Anne-Marie, here, very delicate, and I'm glad I don't have to make it.
All right, so as you can see, guys, this is why it's very important to really kind of look at where the market situation is right now. But I want to go to this point right here, and that is, could Trump remove Chair Powell? Now, remove or step down is the question mark for the Polymarket bet, because I think this would be remove. That, I think, is very low. The real question would be, would Chair Powell step down? Now, that would be a Polymarket. I don't think there's one up there yet. Would he step down? That could be on a greater scale, and that's what Mohamed was talking about. There is precedence for this to occur, and he is right in the sense that with the Fed and the White House both battling, we could see a continued stress in the markets. Darius Dale, who's been on our show many times, hits on a couple of things in terms of POTUS versus Powell, and a couple of things he hits on. It would be disastrous for the bond market, for the Federal Reserve to demonstrate a lack of independence and disregard for inflation. I agree with that, because if inflation does in fact go up because of these tariffs, that's still a question that we have not seen yet, but it does look as though it will. For the first time in years, it's no longer attractive in cross-currency adjusted basis for foreign investors to invest in our bond market. That would be a problem. And that is what he's getting at, because when you look at it, Trump has created a crisis of confidence in U.S. assets. And this is a thing that we'll continue to see. This obviously is rolling out because of the tariff policy. I think Darius is right here. But you also look at the U.S. dollar, which is also in free fall. That means that people are looking to other asset classes. Why you're seeing gold move, why we're starting to see Bitcoin holding a stable position over 80K. Within that, you look further in there, the rest of the world has been fine giving us cash in exchange for IOUs. To live on the high on the hog, you kind of get the whole point, but it cannot be overstated that U.S. exceptionalism was a primary function of that largesse. Now, I look at it in this sense, is that when you look at the U.S., the financial system is definitely the premium financial system globally. Everybody wants to be a part of it. That's why the bonds continue to be a great opportunity. But it also has two other major pillars. And that, of course, is going to be the technology advancement here in the United States. Still, to this day, China continues to steal a lot of the IP because of the lack of innovation there. Now, can the U.S. maintain that? That's a big question. We've been able to hold that over the EU, hold it over almost every developing country, even with the fact that we started to see a shift in blockchain moving mostly into the Asian markets. And now I think you're going to see a lot more of it here in the United States. And then the third is going to be consumer. The consumer itself is the most powerful consumer on the planet. Everybody needs this consumer base because it does contribute to almost 30% of the GDP in terms of the global transactions around sales. Jay Powell knows all of this, and he's doing what he can to preserve what is, and I agree, an absurdly cost of capital right now, doing what every central bank would do to stem capital outflows during a crisis. Mainly, what he's talking about here is just get into a position of continue to push on inflation. And I think that's the big question forward. The fact that bonds rallied during Powell's incredibly hawkish speech is a confirmation. I would agree with that, with what Darius is saying. I still believe, though, that the U.S. is in a very good position, even though these tariffs do start to change the bond market in a way. I don't know if I agree with Jamie Dimon where he thinks that we are in a global monetary shift, something bigger than a recession, something much greater. Could it be, the next digital Bretton Woods that is about to happen right in front of us? Further into this, you've got Kobeisi talking about foreign investors dumping U.S. stocks. This is probably going to happen across U.S. investors dumping foreign stocks soon. Investors oversee almost about $6.5 billion in U.S. equity funds over the last week. Not a lot, but that is a significant amount. In comparison, net outflows were below $7.5 billion during the week in the 2023 banking crisis. And Apollo is talking about this right now. 18.5 trillion of U.S. stocks, or 20% of the U.S. equity market, are still foreigners. So that is a big deal, even with 20% of the market. But I don't know that you'd see a 20% evacuation there, because I think there's going to be deals made. There's going to be deals made that will, smooth this down. It will have to happen. I think the key is Trump is going to look for those windows to try to claim wins going forward. And this is what they're looking at right now on the chart. You can kind of see this is the exodus that we are starting to see on U.S. equity. So that's why we're seeing the S&P 500 moving downward. Question is when and how long are we going to see this position play out? Because what we're seeing right now with gold, Bitcoin, and possibly some other assets, but cash right now is definitely king. Now let's take a look at Bitcoin, because there's a couple of people that are looking at different strategies here of what could happen to Bitcoin as this plays out. Some people are looking at volatility, which could say, all right, maybe this plays out for a little bit of time. And do we see it start to move into a position right now? This crypto quant revealed that about $170,000 Bitcoin, or 170,000 Bitcoin owned by entities with a purchase date between 3 and 6 has begun to circulate. So could we start to see a little bit of movement? Remember, that's been a good move up for Bitcoin owners. So could we see some volatility? Large movement from this group often signal that they mean volatility is inbound. And that is the real question mark. Further into that, you look at Bitcoin versus gold. This is the counter to that, because it's still very easy to get access to Bitcoin. And when you're in a market like you are right now, where things are moving so quickly, people are trying to go for quick and fast to get into something that they feel can hold value. And you look at this right here, both Bitcoin and gold are available in the form of tokenized assets. But the question really is, owning these assets in their original form reveals a lot of big differences. And buying Bitcoin, as we know, very fast in comparison to gold. There's the breakdown, when you look at it. And I don't know. Let me know in the comments down below. Is Bitcoin your alternative? I think if you're watching our channel, but you also may be looking at diversification and saying, no, I think I'd like to own a little bit of gold as well. What routes are you guys taking to try to avoid what we're seeing right now, which is really a securities meltdown, and it may continue as well as with the bonds. Last point I want to hit on, and this is Lyn Alden, who's been on our show before. We're going to have her back on. She has a really good prediction here that I think is relevant. Let me kind of zoom in on this for you guys. So Bitcoin likely to trend higher for another year or so. So that in itself could be very positive for Bitcoin investors, especially trading at 85 today. Black swan event could happen, rare and unanticipated event that could cause a problem. The thing that I am worried about right now is still China and the US, because as we continue in this crosshair, it could put a lot more pressure on technology in Taiwan, which of course we all know what that means. That would be the kind of black swan that could really shake things up. But if you look at this, even in that scenario, it could be around a 30% market crash or correction, and then rebuilding from there. So if we do see growth on Bitcoin, maybe now is the right time. There are a lot of other assets on the altcoin sector that could still be in a massive run up, especially if we start to see interest rates coming down. So you see how all this stuff is kind of balancing right now. It's a very tight rope that we're walking though. Short answer though, she's talking about, I think longer term Bitcoin's run still happening, though she is not a big proponent of the cycles, which I have talked about for a lot of times here on the show, and me neither. I think we've kind of moved beyond that now with where crypto is and in general. But it does put us in a position right now where 2026 could actually be the bad year. 25 is just a very volatile year where there's a lot of opportunity. Let me know how you're playing it. Drop some comments down below. Make sure and get into the Diamond Circle, because it's our #1 place where you get additional content from me. I do a letter every week that goes out to our Diamond Circle. It's only available to you guys. It's free. And it's my opinions and views on the strategies around the markets, but also where I think I'm going with my own investments. If you guys want to catch that, you can do that just by joining. Follow me on X @PaulBaron. We'll catch you next time right here on TechPath.